Well, I don't think the fears have necessarily weighed that clearly on US equity markets. They've probably weighed more heavily on markets outside of the US. At Conning, we think that the disputes between the US and China are fairly long-lasting and actually focus on long-term aspirations that the Chinese leadership have for technological leadership, industrial policy leadership. And it's not just about resolving the trade deficit the US runs with China. So we think that this is an issue that's not going to go away. And in fact, the NAFTA renegotiations between the US and Mexico and Canada are to some extent unrelated to the bigger picture issue with China.
Yeah, I mean, you're absolutely right, Mark. We haven't seen the pain in U.S. markets. In fact, we continue to see record after record for the S&P 500 and the NASDAQ at least. And bringing the focus back here to Asia, we did see some relief at the start of the week over some tweaks the PBOC is making with the counter-cyclical yuan adjustment. But at the same time, many still expect the PBOC to move forward with further stimulus measures. We could also see additional stimulus on the fiscal side. So won't that actually put pressure on the yuan?
It's an interesting question because, in fact, we've seen Chinese policy easing on the monetary side, so this rate divergence between China and the US has been widened and exacerbated, and that initially put downwards pressure on the yuan over the last few weeks. But the removal of this counter-cyclical factor in the currency pegging and the currency setting is an indication of the PBOC that they want to make sure that volatility in the currency is well under control and expectations for further currency weakness are reasonably well anchored, because that will then have an impact on broader economic confidence as well as kind of investment activity.
Mark, it's Sri here. I just wanted to pick up on that because it's clear that Beijing is very committed to stabilising the currency in the current environment. But is there a risk still that the yuan could depreciate and hit, dollar yuan could hit 7, which is a very politically sensitive handle?
I think that there's a huge amount of symbolism in that 7 RMB to the dollar level. And we saw the intervention from the PBOC when the RMB got to about 6.92, 6.93. So clearly they wanted to start to react before we got even close to threatening that 7 level. I mean, it's symbolic. It doesn't necessarily mean very much in quantitative terms. But I think that given the FX reserves that China has, they have a huge amount of firepower that they could put in play to make sure that currency volatility expectations remain quite well anchored.
Yeah, as far as the current account deficit countries in this region are concerned, India and Indonesia, there seems to be almost this kind of Monty Python-esque witch hunt going on to beat up on them by the markets every time we see the stronger dollar environment or more Turkey stresses or Argentinian stresses. Do you think that's justified, Mark? And do you think there's going to be more stress on these markets as we head into election years in 2019?
I think that what you're seeing is macro traders and macro investors effectively getting out the old playbook to say, we put the Turkish lira under pressure, the South African rand came under pressure, the Argentinian peso came under pressure. Let's look at other currencies, other economies in the emerging market complex that have similar structural challenges. And by that I mean specifically twin deficits, current account and fiscal deficits. So it's completely unsurprising that there's been a correlation between some of these Southeast Asian currency movements and the other broader EM currency movements. But the magnitude of the moves obviously been much more modest. Now, one other factor which hasn't been mentioned so far is what's been going on with oil prices. Both India and Indonesia are significant net importers of unrefined energy. And so as oil prices have rebounded in the last couple of weeks, you've seen the current account expectations and deficits there widen and being factored into, effectively, terms of trade implications.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.